Swift just shocked many investors with their latest announcements surrounding new payments infrastructure and their ties to central bank digital currencies. And for quite some time, many folks in the XRP communities have been speculating one of two things. First, that Ripple technology and XRP will either replace Swift as one of the largest providers of global remittances and money transfers, or it will partner with Swift and provide better technology and blockchain infrastructure as an additive to their already robust business worldwide. Now, either one of these would be massive, as Swift is largely responsible for moving trillions of dollars between institutions each year, providing a strong fee-based business model for Ripple, while also providing a corridor for much of that value to work its way into the XRP ecosystem, which would likely increase the price of the XRP token. And as of 2018, around half of all high-value cross-border payments worldwide used the Swift network. And in 2015, Swift linked more than 11,000 financial institutions in over 200 countries and territories, and that has grown. So in this video, we'll be covering what these major developments over at Swift are and whether or not they're either feasible or any of those theories and outcomes are possible. We'll also be covering the Fed's coming rate cut, why it's such an important upcoming event for markets, and what some really smart economists think will happen here on the 18th of September. Finally, we'll dive into the most recent price action on XRP to help you get a better picture of what's going to happen in crypto markets and what's next for the XRP token. So if you're feeling blessed and bullish, comment 777. And if you're going to be the richest person in your family tree, smash the subscribe button. Before we dive in, a quick reminder that the opinions in this video are for informational and educational purposes only and do not constitute financial, legal, or investment advice. All investments, including cryptos, carry risks and potential losses. Always do your own research and consult with a licensed financial advisor. We are not licensed financial advisors, and relying on our content for financial decisions is at your own risk. By watching this video, you agree we are not responsible for any losses or damages, and we do not guarantee any specific results or outcomes. Some of the links below may be affiliate links, and we may earn a commission, which actually helps support this channel and helps us to create value-based videos like this. We also hold some positions in the cryptocurrencies that we talk about, but that's only because we do what we believe in. However, this should not be interpreted as a recommendation for you to do the same. With that said, let's get into the video. Now, before we dive into the major announcements surrounding Swift and the price of XRP and where we're at and what we think is going to happen, I do want to cover the macroeconomics of the first upcoming rate cut here on September from the Fed. And the reason I want to cover that is because it is a major driving force in markets, and it's going to be the very first that we've had in years. So this is kind of a big deal. Okay, markets have been really resilient. This is the price action of the S&P 500. Our most recent high sitting at about 56.70, and we broke down pretty hard back in August 5th, only to see the market rally right back up to that previous all-time high, break down yet again on September 6th, a month later, and then rally super hard into the recent talks from the Fed. Then we saw the market break down again on Friday, September 6th, only to rally extremely hard on a very cool inflation reading. Inflation came down from about 2.9% to 2.5%, below expectations, and has rallied the rest of this week because people are really buying into this first rate cut. Now, markets are thinking or pricing in a 33 to a 34% chance that we are going to see a 50 basis point rate cut down from 550 basis points. So that's basically 0.5%. And then the rest of the market, when you look at poly markets, is pricing in a 25 basis point decrease or rate cut. So I do believe this is more likely. I do believe that although this is possible, a 50 point rate cut, it will also spook markets, and I think markets would be more likely to sell off. So people like Jerome Powell up here are far more likely to want to be predictable and not to spook markets. So for that reason, I do believe we are going to see a 25 basis point rate cut. And I do believe because it's such a small rate cut, but it's also going to give confidence to markets that we're finally going to, lower the cost of borrowing and servicing on debt, that companies are going to have a little bit of breathing room. The consumer is even going to have a little bit of breathing room. And ultimately, the entire economy will as well. So markets are very likely to rally into this first rate cut coming up next week. And that's what I would be buying into. And I think that's why we've seen some very positive price action across all markets, whether it's the S&P 500 or whether it's Bitcoin, or in this case, even XRP. Now, this wouldn't be an unbiased, news source if we didn't actually share the other side of things, right? In this article from Investopedia, the question has been asked, has the Federal Reserve waited too long to cut interest rates? Now, because they kept interest rates so high for so long, it really tightened up the economy. Everyone just wasn't borrowing. Banks weren't loaning money. And now, because things have gotten really weak in terms of the job or the labor market, they're wondering, is it too late to save it now, right? Because this is going to be a lag. Just because they're cutting rates right now doesn't mean that the whole economy isn't going to feel the effects of what happened 6 months prior. Right? And so in this article, they're saying typically the Fed always waits too long, and it's likely that this will be the case with this Fed, wrote Dan North, senior economist over at Alliance. Yet again, Bill Adams, the chief economist at Comerica, said that a strong jobs market data helped motivate the Fed to keep interest rates elevated. But guess what? We actually had a lot of revisions, and the job market actually wasn't as strong as we previously thought. And so that was a major blow to markets and arguably confidence. Yet markets are still resilient. They're still rallying. So that's a good thing to see. But at the end of the day, we have to take into consideration the jobs market is really getting crushed. But with the downward revisions in some of the data, the labor market is weaker than it appeared. And so because of this, according to some estimates, current interest rates could be as much as 2 percentage points too high. In other words, 200 basis points. So we would need about 4 rate cuts at 50 basis points a pop into January in order for markets to act, or for the Fed to catch up to where markets are at, is what they're saying, which could be as much as 2 percentage points too high for current economic conditions, meaning that the Fed officials may need to play catch up. But if the Fed officials do this too fast, then that's also going to spook the markets and be an indicator that things are really bad or really weak, and it will cause a massive sell-off in the markets. So there really is no right approach to this. I do believe the Fed has done a little, too late. However, on the flip side, if they do too much too fast, either way, the markets are going to sell off. So, damned if you do, damned if you don't, is essentially the position they're in. And so this is why many people call it threading the needle. Is it possible that Jerome Powell and the Fed are going to thread the needle for a quote-unquote soft landing? And to be honest, I'm not too sure. But here's what I do expect. I do expect us to rally and potentially put in some new all-time highs in the TradFi markets. So, traditional finance, S&P 500, QQQ, whatever. In that same respect, I do expect Bitcoin and XRP to follow suit because they're highly correlated as risk on asset classes. Now on to the massive news from Swift. And yes, we did find the actual link on their website, but I think this article sums it pretty well. So here is the link on the Swift website directly, September 11th, 2024, if you want to go and find it over there in their news. However, I'm just going to read a few of these things which sound eerily similar to the same solutions that XRP can and will provide. Swift has announced a new initiative on September 11th to streamline global transactions and enable members to use their Swift connection for transactions involving both traditional emerging asset types such as crypto. The new initiative will focus heavily on the global trading of real-world assets. Again, this is a major thing that is going to continue to grow into 2034 as they expect it to be a $30 trillion market cap. This is obviously something that XRP or the team over at Ripple has noticed, and they are also working on solutions for real-world assets and tokenization. That said, inclusivity and interoperability interoperability are central pillars of the financial ecosystem. This effort will initially use fiat currencies and is later planned to evolve into incorporating central bank digital currencies, tokenized commercial bank money, and regulated stablecoins. So again, all very familiar stuff if you're familiar with Ripple and their technologies. And so it seems that Swift and Ripple see the future and they're both moving in the same direction. If you go directly to the Ripple site, you can see that they're already working on releasing their RLUSD stablecoin. That is going to be a massive portion of the business, considering just this last year, USDT, I believe, made about $6.1 billion, while a massive company, the biggest asset manager in the world, BlackRock, pulled in $5.5 billion. And this is insane because, BlackRock has thousands of employees, whereas USDT had about 100 employees. So their operating expenses are far lower. They have far less quote unquote assets under management, if you will, or things to look out for in terms of their dollars. Yet at the end of the day, they are far more profitable. And that market is expected to grow to at least $3 trillion over the next 5 years. So again, this is a massive opportunity for players like Ripple and where Swift is headed. That said, Ripple also provides CBDC platforms. Okay, they recently created a stablecoin for Palau. Now, Palau is a very small player, but if this goes and runs successfully, then it's going to provide, I would say, a path forward for other governments to want to adopt Ripple technology. Now, because there are so many similarities between what Ripple and Swift are trying to accomplish, that's where the theories start to arise. Are they going to use Ripple technology over at Swift? Is there going to be a buyout? Will there be a partnership? Will ISO 20022 be the, way that Ripple really takes over the global financial world? Well, at the end of the day, we're not 100% sure. And I know that's not the answer everyone wants. But based on the information and research that I've done, the answer is probably no. Swift is going to be its own business, trying to rule and dominate the market as it always has, while it improves its technology. And Ripple is going to be a disruptor in the space. And when you look at Ripple technology versus Swift technology, Ripple technology is technically better, but that doesn't mean they have a large portion of market share. And here's an older article where Swift and R3, which is another blockchain company, have developed a proof of concept that links Swift's GIP payments network, which is an old system of a payments network, with R3's Corda platform to monitor payment flows. However, absent from an announcement was any clear statement that Ripple's company would play any role in that partnership, much less introduce its XRP cryptocurrency to the Swift network of financial institutions. And at the end of the day, this sounds kind of silly, right? Why wouldn't they adopt Ripple? Well, at the end of the day, they are both businesses. They're both in the business of keeping clients, keeping customers, getting more of them, and making money. But when you actually compare Ripple to Swift, the Ripple payments protocol is known for an exceptionally fast infrastructure, relying on a consensus-based algorithm to secure transactions. Ripple's network executes and finalizes transactions in 3 to 5 seconds. However, Swift transfers between first world countries and well-connected banks may pass within 1 to 2 days, while low-resource nations might take up to 5 days to be cleared. Additionally, most Swift payment timelines don't include business days, meaning that if you transfer across a weekend, you'll likely need to wait an extra 2 days. At the same time, Ripple has far smaller fees, while Swift fees, range anywhere between $10 to $50. So across the board, Ripple does take the cake here. However, since this article was written, things have improved over at Swift due to their ISO 20022 standard. In what marks a significant milestone in delivering its strategy for instant and frictionless transactions, sounds very similar to blockchain and Ripple, Swift has enabled financial institutions to capture rich data at source by standardizing the payment end-to-end with ISO 20022. ISO 222's richer, more structured data facilitating automation and reconciliation and drastically reducing integration costs. Now, for those of you guys who've maybe heard this over and over and over again, maybe you're on social media platforms like X, you read some influencer share information on this, and this is the standard, it's going to change the world, and how XRP is the it thing. At the end of the day, this is just a standard for transferring data. Now, let's just look at what ChatGPT actually has to say about it. ISO 20022 is an international standard. It's just a standard, that's all it is, for electronic data interchange between financial institutions. So when you think about companies like Oracle, which made Larry Ellison one of the richest men in the world, it's just standardizing data and information, which is extremely important in the Internet of Things. It provides a common language and model for financial messages across different systems and organizations, enabling more efficient and standardized communication in financial transactions. ISO 20022 covers a wide range of financial processes, including payments, securities, trade, and foreign exchange. This is the standard that they've been moving towards, and I would argue blockchain solves this problem, but that doesn't necessarily mean it solves the problems of cross-border transactions worldwide when it comes to regulatory issues and just a standard of communication, because each blockchain can't just communicate with each other, right? That's why we have bridges, and there's a lot of issues with bridges in terms of security. So if we really want a standard for all sorts of different central bank digital currencies to communicate and transact, different banks all around the world to communicate and transact, they all have to be on the same standard. Many people argue, well, that is Ripple. However, Ripple has a lot of big players to take out first, Swift being one of them. So, there are some silver linings here, but my theory is that they are currently competitors and there could be a potential for a partnership. But as of now, I've looked, there are 0 partnerships. The only partnership that I've found is R3 with their blockchain technology, which is a blockchain technology company, and Swift. Now, here is the 2023 yearly or annual report over from Swift, and yes, things have been improving. In 2023, they made strong progress towards achieving goals. In fact, in-flight speed on our network is already ahead of expectations, with 89% of transactions reaching recipient banks within an hour. So back in the day, right, we were looking at 2 to 5 business days, right? Very slow settlements. Now it's literally 89% of transactions, and we're talking over trillions of dollars within an hour. And 50% of those getting it in 5 minutes or less. Again, not as efficient as, let's say, Ripple and the blockchain technology that they offer. However, they are working on improving. So it's one of those things that it doesn't seem that they're actually facilitating or using Ripple technology as of right now. Again, that's potentially a bummer, but here is the silver lining. The fact that Ripple is still a far better option, which would lead banks to want to start to adopt the Ripple standard, okay, which will probably build in some value into the XRP token in the future, or at least drive eyeballs and traffic to that token. But the fact that, these guys are still far slower and less efficient, and it's going to take some time. But it's also hard for countries and banks to want to switch, right? So one of the real crypto partners of Swift, and again, this is from swift.com, so you can't not verify. This is a very recent article titled "Swift Unlocks Potential of Tokenization with Successful Blockchain Experiments." One issue challenging investors and institutions is that tokenized assets are managed on different blockchains. So here's a good piece of education for you guys if you're interested in how Ripple is trying to dominate the world of global remittances, each with its own functionality and liquidity profile. Interoperability is just communication between different blockchains is crucial. Otherwise, financial institutions must build connections to each platform, creating significant operational challenges and cost. Working with more than a dozen financial institutions and market infrastructures, and Chainlink, which is a blockchain company, right, which is really an Oracle or a data company, a leading Web3 services platform, Swift has successfully demonstrated that it can provide a single point of access to multiple networks using existing secure infrastructure, thereby significantly reducing operational challenges and investments required for institutions to support the development of tokenized assets. In other words, they're trying to keep their customers, they're trying to improve their technology and infrastructure. They are using Chainlink, they've used R3, but I have yet to find a verifiable claim to the fact that Ripple and Swift are connected. I have seen 2 different articles, both were completely false. and then they had promotions down below for different things. Crypto Alert is not a good source of information, I found, and no other credible sources of information double verify the claims that are made on there. They just kind of take any headline that people potentially want to talk about, and then they make up an article. So very difficult to find any real things. The only real things I found are directly from the Swift website itself. So it's very important to verify your information when you're looking for it. So again, there is a silver lining though. Alongside R3, Ripple has long been touted as a front runner to partner with Swift, and the announcement from the Swift trial with R3 appears to be a blow to Ripple. But that doesn't mean Ripple is out of the running yet. And now with the regulatory clarity, okay, and especially with, no appeal coming up probably on October 6th, it seems that that's probably off the table, that XRP and Ripple are finally going to have complete and total regulatory clarity to move forward. And I think that will provide a path forward for a major player like Swift to say, you know what, we have some great standards over here. Yes, we've worked, and they spent probably a lot of money to integrate ISO 222 into their ecosystem and platform. But at the end of the day, in a global world where companies are competing and the best technology wins, Ripple seems to be a better technology. And so it is very much possible and potential that Ripple will be a player here in the near future. And if not, they will start to dominate in terms of getting new banks, new customers, and new organizations to use their blockchain technology. So all very bullish things for Ripple and XRP. And as of today, XRP is up a bit, right? We saw some pretty strong price action, again, about the same day that we saw inflation drop quite tremendously or cool, but we're still below this trend line, and you could argue it's somewhere right around here, right? We're trying to hit as many of these highs as we possibly can. So as long as we start to break above this green trend line, we're just near to the top of it, things are looking good. We also have a series of higher lows from the local low on July 5th, yet again, I believe on the Japan JOB issue, okay, and yet again over here on September 7th. So we are starting to paint a triangle, and it seems unless we break back down to 54 cents, things are looking really hot for XRP. However, volume is not truly confirming this breakout. So I would like to see volume go above average, which is about 5.8 million on the Bitstamp exchange. We did see the stochastic RSI cross over, and I would hope we start to chill just for a day or two so this thing can cool off before making a new high. From a weekly time frame, again, very straightforward. We want to break above that 65 to 75 cent range. This is the range to beat. If we do not beat this range at some point here in the near future or break above it, then Ripple truly is weaker than we would have expected, which at that point I would expect it to break back down to at least 42 cents, if not lower. So this is the range to break to, okay? We're talking 67 cents up to 75 cents. In that range, if we see Ripple hit that and we start to see some volume enter the space, as you can see, volume is consistently declining even from a weekly time frame, which is not a very good indicator that we're seeing a lot of institutional support right now. However, we are seeing a lot of strong retail support. These are retailers who are simply holding, they're not selling. Yes, the token looks relatively strong to Bitcoin, and if I pull it up from a weekly time frame, I'm not too sure, but I'm pretty sure from a daily time frame. So from a weekly time frame, it is relatively weak compared to Bitcoin. However, from a daily time frame, we are relatively strong, and we've been stronger than Bitcoin since July 12th of this year. So this entire range right here has been stronger than Bitcoin, but for the year it has been weaker. But at some point in time, when we see a breakout here, XRP moves in explosive ways, right? I mean, we saw it here on July 13th of 2023 on the outcome of that lawsuit. We've seen it again right over here through December 20th through April of 2021. And of course, we saw it back in those early days of 2017 to 2018. So XRP is far more explosive than Bitcoin, and it has failed to be explosive for a long period of time since April of 2022. So we're talking a period of over 2 years now. Something's going to have to break. Something's going to have to happen. And just seeing the fact that we have so much volume down here in terms of support, right? This VRVP is insane, from 38 cents down to 35 cents. I just don't see any way we could break down well below there, even in some black swan event. I think even if we wicked down here to 30 cents, right, it would get bought right back up. So if for whatever reason we break down between 47 cents to 34 to 30 cents even, I would be backing up the truck to buy more XRP, because at that point in time, I do believe we've had our final capitulation and leg down before we start to break for some new all-time highs. So if you enjoyed the video and you learned something new, go ahead and smash that subscribe button, like the video, it really helps the channel out, and then head on over to bullrunners.com. Now this is for anyone who is an XRP holder or plans to be picking up more XRP here in the near future and then holding it over, I would say, the next 3 to 6 months at least. Okay, if you're in that camp of people, this is a great way to not only reduce your volatility in the case of some downside, but also to compound on that XRP in the case of some upside. Okay, you're going to go ahead and go to bullrunners.com to discover how to earn more crypto in less than 10 minutes with the #1 play to earn XRP game. It's brilliant, guys. You do it in 3 simple steps. You get your wallet, okay? You get your game pieces. You play for 10 minutes a day. You earn crypto, which you can convert directly for XRP. We have some folks in the community that have been earning up to 1,000 to 2,000 XRP per day, and we show you exactly how to on the other side. It is very much real. It's been happening for plenty of people. It's been happening for Nick and I, and we want to share this with you guys. We wouldn't be sharing it with our community if we weren't very confident that you could get some level of a benefit with it. In the case of XRP, right, you're already going to hold it. You might as well put it to work. So go to bullrunners.com. I look forward to seeing you on the other side, and thanks so much for watching the video. I'll see you next time.